Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good morning. You're watching Chartbusters, the show where we highlight all the buzzing stocks of the day, get you expert advice on how to capitalize and trade on those stocks. All that packed in the next half an hour. I'm Mangalam Malu. With me is Reema Tendulkar. A soft start to a truncated week. Reema, we're currently closer to the lower end of today's trading session, despite the bit of recovery that we saw on the Nifty Bank. But individual stocks, they're taking it on the chin as we speak. IT stocks, by and large, outperforming because of a weak rupee, barring Infosys. Hi, morning.
Hi Mangalam, good morning. Yes, a global pullback on the back of this deepening financial crisis taking place in Turkey. But let's drill it down to the headlines at this hour. State Bank of India extends losses as Q1 misses expectations. The management tells CNBC TV18 that it is difficult to achieve more than a 10 to 12% loan growth on the back of their high base. Adds that they will contain slippages below 40,000 crore rupees for FY19.
Brokerages, they're upbeat on GAIL post a strong first quarter result. The stock remains a top pick in the oil and gas space for Nomura. Jefferies raises their EPS forecast for FY19-20 by about 4%, while Kotak Institutional Equities raises their target to 440 rupees versus 410.
Emerging market currencies weaken. The rupee hits a record low against the US dollar. IT stocks like Tech Mahindra, Wipro, HCL Tech holding the green.
Focus on earnings. United Breweries reacts positively to a strong set. Management commentary was positive as well. Godfrey Phillips too in the green on the back of a good first quarter results, where margins come in at 17%.
India Cement's Q1 comes slightly above expectations. Higher power and fuel costs hurt margins, and realizations as well come in sharply lower on a year-on-year basis. Andhra Bank reports its fourth consecutive quarter of net loss. The asset quality improves, but the P&L remains weak.
All right. Meanwhile, the mid-cap rally, that one seems to be seeing a bit of a pressure as we speak. The mid-cap index is down by about 75 points, but the Nifty Bank down about 350 points, despite of the low point of the day. Let's see what the call is. Ashwini, in the morning, you said that, there could be purchase for a pop on the upside. We're currently at the low point for the Nifty Bank itself. Do you think there is more to go on the downside, or an intraday rally is still on the cards?
See, the markets are covering, are seeing short covering. Also, Dow futures is off the lows and now recovering a little bit. So this is the right time to buy. You are down, I think, almost 550 points on the Bank Nifty from Friday's high. Similarly, you are down, I think, about 150 odd points on the Nifty from Friday's high. I think a 50% type retracement is very likely. And why that will happen? Because for some reason global markets will recover, because you can't keep bashing down markets on the same news. So my sense is that today in the afternoon you could actually have that rally, because by now I think enough people would have been short on the market, and once they don't get follow through, or once Europe does not follow through and US futures recover further, I think it will be unsustainable for them to hold on to positions. This is the position that I am taking after 350 points down on the Bank Nifty, 70 points down on the Nifty. There is no value in being incrementally short, because the problem really isn't at our shores. And these sort of global issues, they tend to, resolve on a dime, on a tweet, etc. So that way, this is a good time to buy it. UBL is a buy with a stop of 1230, target of 1300. Larsen is a buy with a stop of 1255, target of 1310. Hexaware is a buy with a stop of 480, target of 515. Let me clarify, this is not my prediction. This is my trading strategy. And strategy means have your stops in place. So a low of the day type of stop should work from here. Your downside is probably 30 points. Upside could be 100 on Nifty. Downside on Bank Nifty is maybe 50, 60 points. Upside could be 150, 200.
Okay, Ashwini, thank you very much for that. So that is his trading approach to the day. Go low at these levels. Go long at these levels. Onto a CNBC TV18 exclusive then. Nigel caught up with the Steel Secretary Aruna Sharma from the sidelines of the 4th India International DRI Summit in New Delhi and began by asking her about the outlook in the steel sector.
It's the work of the entire team, starting from the small steel producers to the big steel producer, the policy makers and the government in place. So they all worked in tandem with each other, and that's why you have the best of the results that are available today. And that's the way I hope will continue in coming years. Not just hope, I'm quite confident about it. That is how it will grow.
We are talking about DRI steel, ma'am. So coal seems to be, something that all these DRI players, they've been looking forward to. There has been some kind of a mismatch in terms of demand and supply of thermal coal, as we call it. Is there something being done to increase the supply of thermal coal to these DRI producers?
You are absolutely right. Recently there has been an auction for the sponge iron producers, and with a 35% more than the floor price which the coal ministry has thought of, they have picked up the mines.
Yeah.
So that is how it will go, right? And there is a serious thought going on how to have an assured coal supply within the coal ministry and at the PMO level as well.
Right.
So we are very sure that the outcome will ensure that there is a constant flow of the coal for the sponge iron manufacturers, which are the end users of the coal.
Right.
So there will be separate auctions for them vis-a-vis the power plants.
Okay, final question, ma'am. There's just a bit of worry in terms of kind of imports that are coming into India. Suddenly we're seeing a bit of an uptick. Are we taking a relook into the reference price? Could there be some more protection that could come in for our domestic producers?
In India it is a deregulated sector, so there is no protection that we give, and we are ready with the safeguard measures if required. And you have used the correct word, that a bit more. So bit more is in decimals, right? So at this point there is nothing to panic about. It is in decimals, and where it is coming is in the auto tool sector, where the growth has been 18% of the manufacture. So we will never have zero imports. We definitely need imports, but we have to ensure a balance that India does not become flooding ground, because India is the bright spot. India is where the domestic consumption is going to grow at the rate of 10%. So nowhere in the world you are going to have this. The rest of the world has plateaued out. So now we are on that trajectory. So definitely we will like Indian steel manufacturers to have the optimum and maximum share out of it. The import should not be more than 5% to 8%.
All right, we see a wee bit of recovery on the Nifty Bank to the tune of about 70 odd points as we speak. This compares with the start of the show. A couple of mid-caps, they're doing fairly well. So the likes of Nalco should come up for you at the high point of the day. Along with that, we have IDFC Bank too, which is trading higher as we speak. And a couple of these Reliance Group stocks, the likes of Reliance Communications, 8% off the low point of the day. And adding to that list is Reliance Infra too, which has recovered a good 3% from the low point of the day.
Company on our radar right now is Uflex. It's down 3.5% in trade. It's delivered a mixed set of Q1 numbers. While the revenue growth at 17% looked good, the margins were compressed. So margins were down by 130 basis points to 13%, impacted by a higher power as well as material costs. To discuss this and more, we're now joined by Rajesh Bhatia, the global CFO of the company. He joins us on the phone line. Mr. Bhatia, good morning and thanks so much for joining in. Let me start with your top line growth of 17%. 14% is accounted in the back of a sales volume. Could you explain where the remaining 3% came? Was it an account of price hikes, or was it a change in your realization mix or product mix?
I think it's largely because, the basic raw material, which is crude, went up during the quarter by about 17%. So, a large part is on account of that, other than, the volume part.
All right, so let's take that crude point forward, Mr. Bhatia. This quarter, you've done revenue margins of around 13%. You had earlier guided 15% for the full financial year. So do you think you will be able to achieve those margins given where crude is right now?
So I think we have, in the packaging business, we have some lag effect of the margins. So that is why the packaging business margins are a bit down. in this quarter, but the films margins, the packaging films margins are definitely up this quarter as I had guided last time. So with the lag effect, what happens is that when the prices have gone up by 17% in the last quarter, while I have to absorb the prices, the effect of that on my realization comes in the next quarter or next month, depending upon how my sales are contracted with the customers. So that's primarily the reason that the profitability growth EBITDA is about 8%, while the sales volume growth is about 14%.
Margins for FY19 is still possible, is what you're saying?
I would say so, provided the crude is stable. If the crude is not stable, I think this quarter we've already seen some reduction in the crude prices, so that should be positive for our business.
Okay. Mr. Bhatia, of the 17% increase in the crude oil prices, how much were you able to pass on to your clients and how much did the company have to absorb?
So, it works like this. In the packaging films business, it is passed on the day one.
Okay.
While in the flexible packaging business, if your contract adjustment is on a quarterly basis, so the last quarter prices gets reflected in the current quarter. So, while the last quarter the prices went up by 17%, this quarter they are down. So the last quarter 17% increase will get reflected in my prices in the current quarter.
Okay, so what would that mean in terms of your margins purely for the quarter that we are currently in?
I think this should give us about 1.5% or so.
All right. Let's talk about the BOPET prices now, the BOPET prices. Where exactly do they stand right now? The last time you spoke to us, they were around that 120 mark. You said it can go high by about 5 to 10%. And in that light, which part of the BOPET cycle are we in right now? Do you expect the prices to firm up going forward as well?
So current BOPET price, if you see the 12 micron equivalent film, is about 135 rupees now.
Okay.
And the raw material is 84, 85 rupees. So, that gives you a margin of about 50 rupees a kg. Q1 of last year, the BOPET prices were about 100 rupees and the raw material prices were about 66 rupees. So the margin was about 32, 33. So clearly we've seen that, the margin has expanded. And Q4, the margin was about 50 rupees. And July, we've seen a 1 rupee increase in that margin. I think there is 3 to 4 rupees more what we can expect as the demand supply equilibrium is heavily skewed now. And, we have in the BOPET at least, a position where, you have a backlog of order of between 1 to 2 months. So clearly the margins look to will be better.
Mr. Bhatia, let me come back to the, the question about the overall margins and the impact of crude oil prices. You said Q2 margins will be lower by 1.5%, right? Due to the lagged impact of higher crude prices in the quarter gone by. So therefore Q2 margins...
No, I said the Q2 margins, if this quarter I had in the April, May, June quarter, I had the opportunity to recover the increase in prices in that quarter, the margin in this quarter would have been higher by 1.5%. So now I'll realize that gain in the current quarter. So the current quarter will see the impact of that.
All right. So current Q2 margin should be higher.
Yes.
What about your revenue contribution from the liquid packaging business? When we last spoke to you, you said 350 crore on an annual basis.
Yeah. Liquid packaging, currently we have, last quarter we had about 12 customers. This quarter we have about 20 customers, but the ramp up with a large customer is where we are currently focusing on. And that should happen probably this quarter, and 1 or 2 accounts have already given us the heads up. And I think the contract should be done in this quarter. So I think by the end of this fiscal, we should be up and looking at about 60% capacity utilization in this.
On some IT stocks, in fact, IT has been the one which has supported the Nifty so far on account of a weaker rupee. So the likes of Tech Mahindra, Wipro, all of them higher. TCS to hit that 2,000 mark. But remember, ahead of the buyback, 2,000 is an important mark because for retail investors, over 2,000 would mean that the number of shares that they have goes above that 2 lakh mark. But Infosys, that one is is underperforming the other IT stocks. At one point was in the red. Rima, what explains that underperformance?
The promoters, that's Mr. Shubulal, who was the last founding CEO of the company, has sold a very small percentage of his stake. So he has sold about 1.6 million equity shares, which represents about 0.07% of the entire outstanding equity base of Infosys, but about 0.5% of the promoter holding. The shares were sold between 8th and 10th of August. The monetization was done by Shubulal in order to raise proceeds for his personal uses, including philanthropic activities. Now, the stock has done very well. In fact, this morning itself, it had hit a record level of 1,400 rupees per share. The stock had rallied about 32.5%. It's a very small holding, just 0.5% of the promoter holding, and promoters itself hold about 12.9% in the company. So net-net, as a percentage of their big base, it's 0.07%. And it's purely for personal uses. But generally, a promoter stake, puts an overhang on the company. Though that said, as we speak, the stock is recovering from the morning lows.
You said it, Rima. So we will keep an eye out on where Infosys goes from here. But another stock on our radar right now, we have Indostar Capital Finance, the next stock on the back of their first quarter numbers. It was mixed. The AUM growth was strong, but the operational performance was slightly weak because of the higher operating expenditure. So we have with us Mr. R. Sridhar, the Executive Vice Chairman and CEO of the company, joining in. The stock at the low point of the day right now as we speak. The net profit also lower on account of the Ind AS impact. Thanks a lot, Mr. Sridhar, for joining in. What exactly explains this huge bump up in the operating expenditure, and is that run rate likely to continue going forward?
See, we are predominantly a corporate lending company till about 3 months back. And the plan is to transition this company into the retail. So till last quarter, we had about 75% of our total business in corporate lending. And now 25% has been in the retail business. So when you have to build the retail platform, naturally we have to build our infrastructure, people and all that. So we have opened about 130 branches and 1,500 people have joined the company. So naturally the operating expenses will be there. And that is one impact. And as you rightly said, the transition from the IGAAP to Ind AS, where in the corporate lending business we have had a lot of fee income that has got amortized. So these are all some of the reasons. But if you look at the operating performance, which, in terms of disbursement, we have had a very strong quarter. It's 2,260 crores is the total disbursement, which is 3 times compared to the last year same quarter. And both the corporate as well as retail have performed very well. 1,500 crores of corporate and around 800 crores of retail. All of them are 2 or 3 times higher. So our traction in both the business disbursement has been quite high. And vehicle finance, which is going to be the engine of our retail financing business, has a traction of 110 crores per month. So that has been very, very, very strong. And the cost of funds has remained very stable at about 9%. The asset quality, which has been a preoccupation in Indostar, we have been maintaining excellent asset quality, has remained stable during this quarter. So these are all some of the very important parameters which we have achieved. So operationally, we have done very well. We are on track as per our plan in terms of disbursement and business rollout. But because of the migration to Ind AS, some of the accounting treatments, it is looking temporarily lower.
Okay. Mr. Sridhar, good morning. So the current ratio of your business is 75% corporate and 25% retail. What is your own plan? How do you want this business to look, say, in the next 5 years in terms of a breakup between corporate as well as retail? And when that happens, what would the company's margins look like and your risk profile?
See, we have 4 lines of business. Corporate lending. In retail, we have got 3, which is SME, vehicle, as well as home loans. So these 4 lines of business will grow according to its potential. We are not putting any percentage in terms of mix. So as you rightly said, it was 75-25 last quarter, and it has moved to now 70 and 30. And we do hope by 2020, it should be 50-50. And in terms of the margins, because in the earlier years, it used to be corporate lending business only, where we have very low leverage. So equity component was higher, that pushed the NIMs up. But when we are now leveraging this company, the NIMs are likely to come down. So it is better to look at the spreads which are very, very stable. We have always had a very comfortable spread of between 3.5 to 4. And we are very confident that in spite of mixed change between corporate and retail, this 3.5 to 4% spread will continue.
Sridhar, you know, the CV business, which you are fairly bullish on, a couple of questions with regards to that. The new Axle norms, has that affected borrowing? Because 70 to 80% of your CV business is from the used vehicles space. Secondly, you are predominantly in the south. Is there competition out there? And when does this business break even?
See, we just started our CV business. We are very new. We are only just 6 months old. And you know that Tamil Nadu has been the ecosystem center of commercial vehicle financing business. So we started from Tamil Nadu. So Tamil Nadu naturally is stronger for us. But we have presence in 15 states. It's not that we are only present in South. So we are present in 15 states. In all 15 states, we have done CV financing business. So we are not South focused. But our run rate is 110 crores, which is roughly about 1 crore per month. In that, more than 75% of our business in used vehicle, and our yield in used vehicle finance business is around 16%, which comprises of both new and old. So the new Axle norms, according to us, will not impact the demand for both new and used vehicles, because the overloading has been already prevalent. Now the government regulation has only regularized it. So I don't think it will impact us.
All right, Mr.